in just 4 days. I'm your host, Steve Van Metre, and thanks for joining me today. And our lead story today, stocks are about to hit a major inflection point. And while many traders and investors are now hoping the worst is behind us, I want you to see why there could be a whole lot more chaos ahead. And that's why every Sunday we look at the technicals, momentum, and machine positioning of the broad equity, bond, commodity, and currency markets to help you be a more effective trader and investor. And with that, let's head over to Goldman, where we want to take a look now at how the machines are positioned. Because if you may recall, over the last couple of weeks, we talked about how the machines would cover those long positions in a big way, and sure enough, they have. So here we can see from the tactical flow of funds gone till November. Look at this. Here we're seeing the biggest question coming in is, will this be over? Is it done? But notably, what Goldman's saying is the negative flow of funds remain the driver of price action just for about the next week. And that's critical if you're looking at jumping in. Hang tight, because they're saying they're going to sound the alarm bells when the elevator is down and we can ride the escalator up, which they're calling. And Goldman believes that stocks are going to rally into the end of the year. Question you might be asking is why? Well, let's take a look. The positive setup for the rest of Q4 is about as good as I've seen once we clear this flow of funds supply. The worst, here we go, of the market technicals will be behind us by the end of next week, let's say around the timing of Thursday, hence what's coming over the next 4 days. But in reality, is this likely to be a short-term bounce, or are we on a bigger move up to the downside? I'm going to make the case, well, perhaps we're going to see a whole lot more downside, but in the short term, it does look like Goldman's got it right. The number of questions hits my desk is, are we there yet? The answer is no, but green shoots are forming. The only question is, do they turn brown? And here we can take a look at systematic positioning in U.S. equities. We talk about how the machines would cover those long positions. They like to lock in gains when they can, and they see the momentum of the market move to the downside. Here you can see in blue the CTAs, risk parity, and vol control funds. These things control hundreds and hundreds of millions of dollars, billions, that is not millions, billions of dollars. You can see they're extended to the downside. And this is what Goldman's starting to talk about here is, hey, wait a minute, these machines have gone perhaps too far. And we note that that does happen from time to time. And if stocks can rally here, well, guess what that means is machines are going to have to buy into that rally in a big way. Here we can take a look at the CTA supply. We saw the fastest 5-day sell unwind in their data set. We warned you this was likely to happen, and it did. They estimate $52 billion in global stocks for sale in a flat tape over this next week, and $73 billion for sale over the next 1 month in a flat tape. This is very front loaded over the next week. So here you can see over the next month, over the next week, look at this down tape, $65 billion to sell, $25 billion in the S&P. We've been seeing some of that. If we see more, look for more selling by the CTAs. But over the next 1 month, $122 billion to sell. That's not good. But here you go, in an up tape. That's the risk now. If we see investors and traders come in and meaningfully move this market higher, look at over the next 1 month, $195 billion to buy, 63 alone in the S&P, and that's going to put a huge tailwind under the market. Of course, the biggest event coming up next Thursday, that is the CPI report. Don't look for anything to happen until after that's released. But here we can see CTA position in U.S. equities. Man, they came down in a big way. This is the opportunity if you see stocks move to the upside. But what could be the driver of that? Well, it's our friends, the corporates. As a blackout window, we're quite in the middle of that peak right now, as 91% of corporates are currently in their blackout window, which means volumes dropped by 35%. They return from their blackout window. This is a key date, October 23rd, and they become very busy at the end of the year. November and December are the two best months of the year for corporate share buybacks because they're really aggressively buying out as much as they can. This is historically what we see. And this is where Goldman's starting to say, hey, wait a minute. Before you jump into this position here, look at how the machines are holding this. They're still selling, but at the end of the month, the corporates come back and buy, and that could really drive the tape up and force those machines, once they've settled down, to come back and put a big tailwind into the market. And as we know, of course, that Santa Claus effect, a lot of traders are looking for it, and now you can too. Let's take a look at the position of the S&P 500. We have over 4470 to buy, under 4300 to sell. So we're just above the 4300 mark. So really we need to see some little more buying in the S&P to trigger that. Otherwise, we're going to see further selling, which is what Goldman suggests here is likely to happen anyways. Again, setting up a big opportunity at the end of the month as the blackout window starts to expire. Let's take a look at our own screens. We have the S&P 500. We got momentum is negative. RSI is above 43. Now, we want to see that when the RSI, or relative strength index, gets above 40, that starts to indicate momentum is positive. The next thing we want to see is a positive cross on the MACD. Now, we've got our own Momentum Timer Pro report. If you're struggling with all these technical signals and you don't know what to do with them, our report takes a whole bunch of them, puts them all together, smooths them all out, and gives you one easy report every day to figure out. And right now it's $20 a month. You lock it in for life and you get the first month free. There's a coupon code in the description below. Check it out. All right, we got 14 consecutive daily sell signals. At this point, we would want to look for a flip to a daily buy signal. And here we have no positioning, so we're out. Remember, we got out of this. And what we're looking for is a fast signal on our CTA report. So we have a report that mimics the machine positioning, and you'll note it gets an advanced lead on where those things are going. There's two things I want to see. One, this minus 100% short on the fast side flip up to a buying signal of minus 55% short, and I want to see a one-day signal on the Momentum Timer Pro. Again, links for both in description below. Our CTA report is a must-have. It's $30 a month. You pair these together, you got a dynamic duo that many of our subscribers love. We've got an upside target, 438.36. That's a 100-day moving average. Downside target unrevised down below. Let's take a look at where this is likely headed. And I want to make the case of why, even if we see a short-term bounce here, we're still in perhaps a broader technical trend to the downside. So as we look at the 2-year chart, we can see why the CTAs have sold down. Stocks have rotated over. Momentum's moved to the downside. You see it's right above the 200-day moving average. Now, the 200 days is critical because when you get a cross of a moving average and a confirmation, that's a positive sign. It didn't hold it here, but if it holds it here, that's extremely bullish for technical traders. You can look at the MACD down here. Boy, it's a little slip up there. It's about to have a positive cross. RSI is moving up off of oversold territory. That's why we saw the bounce on Friday. But if we take a look at the weekly chart, let's zoom out here and to the 10-year. What do we see? A broader picture of momentum slowing. Now you look at the RSI, it's sitting at 48 and trending down on the weekly. You look at the MACD, you've got a negative cross to the downside. That's why we're making the case that perhaps this is a short-term bounce. We'll see just how much these corporates authorize going into the end of the year. Let's take a look now at the tech stocks. QQQ, momentum's positive. RSI is at 51. MACD's got a positive cross. We now, on Monday, we'll have one consecutive daily buy signal. On the top of that, we've got our CTA-Timer Pro buying back into this rally. That's why we're saying buy it open. Monday on 10/9, we'll flag our report. That's the signal we want. We want to see the CTA report buying up and a confirmation on momentum. So we're going to put that trade in on the books. Set the stop loss 352.74 just to give some room to run here if it goes down. Upside target 379.87. Downside target 338.82. Let's take a look at the charts. And here we see QQQ, again, bouncing off of this, trying to find a rally here and get some momentum going on it. You notice it's just above what is not really a very great supply zone. It's kind of weak, but we can look in here, and what do you know? There's some volume here. So buyers have been in this zone too. Now we're ways away from the corporate share buyback blackout window ending. Try to say that 10 times in a row. But notably, what do we see? MACD's got a positive cross here. RSI's moving up. Let's take a look at the weekly here, and what do we see? Same trend as before, but could we get a short-term move up higher? Absolutely. That's why, of course, our CTA program and our Momentum Timer Pro program picked up on that signal and said, hey, this is a place to take a short-term trade. The risk here is fairly reasonable, and that's the key. Now, we've been talking long-term. The bond market's going to have some massive opportunities. Are we there? Well, we might be getting close. Let's take a look at this from Goldman. The name of the game is bond, the long bond, they say. We have $334 billion of bonds to buy in an up 2 standard deviation tape over the next month, and that's a lot. And we have $67 billion worth of bonds to buy in a down 2.5 standard deviation tape over the next month. Translating, we're buying bonds. We estimate the current CTA bond short is a whopping $274 billion. Now, this is important to understand. When these machines get really short, it's a risk position, because if the market rallies from there, if bond prices go up, interest rates go down, they get slaughtered on their short positions. That's why they come aggressively off of those when the market turns, and on the top, when they're long, they don't come off as quick. So this is key. Watch, if bonds start to rally, these machines are going to come back in a big way and cover those shorts. And here we can see the U.S. bond CTA estimates on the flat tape. They are still net selling a little bit, but anything else, they are buyers across the board. Let's take a look at our screens here. We've got first TD Securities over 109.92 to buy. This on the 10-year, so nothing to sell. These machines, a lot of them are maxed out to the downside already. That we know. Nomura, TD Securities, and Goldman pretty much all sold out for the most part. And now let's take a look at TLT. Momentum's negative. The RSI massively oversold to 25. MACD's got a negative cross. Not good. But how about this? 14 consecutive daily sell signals on our own Momentum Timer Pro report. So what are we looking for? A one-day flip on that, and it to come off of this massive short position on our CTA-Timer Pro report. So we're adding that. We're going to add a position when both confirm. We've already got 2 positions. Cost basis 193. Closing, wow, 84.79. Remember, we've told you, trade with a stop loss. But if you don't, we're going through this, show you how to recover from it. It'll be all right. You'll see. How about upside target? 21-day moving average. Downside target, woof, 80.51. We're talking deep levels below. Let's take a look at the charts here of TLT. And what we know, man, this thing is in dire straits. To zoom out, we don't even need to zoom out to the 2-year chart. First move is going up to this 21-day moving average. We know the MACD massively oversold. We know the RSI oversold here, so we're looking for kind of a clean move up here and a decline in the moving averages to support some of this. But we want to see these machines come in and buy up off this level, and we want to get our indicators to match that on the weekly. Let's just take a look, because I didn't look at this before. And you can see massively oversold on the weekly. The last time it was there, it was buyers came in. The last 3 times, buyers came in a big way. So look for that. This thing oversold in potentially one of your biggest trades that you can have this year. Believe it or not, I know a lot of people say it can't be on bonds, right? It can be. Keep an eye on that CPI report. Look for some other indicators. As the economy slows and the inflation cools off, bonds are coming back in a big way. But what about gold? We talked about this big triple top in gold. Everyone said, Steve, you're off your rocker. Means nothing. Well, it turned out it meant something after all. Then we showed you the head and shoulders pattern. Everyone said that was bullish. We said, no, it's bearish. Trust me, it's how it works. We said it was going to get through 1920. Everyone said, great, I'll buy. It broke that. Our next target was 1820. We're getting close to that. And let's take a look at gold. Buying above 1890, selling below 1800. This, according to TD Securities, getting no support from the machines in your gold positioning. Multiple tops and bottoms. We talked about that triple top. Many of you just shook your head and said, you're nuts. Turned out, weren't so crazy after all. But we're getting ready to set up potentially to trigger a buy signal on this. Let's look at GLD. Momentum, negative. RSI is 26. MACD, negative cross. We got 9 consecutive daily sell signals on Momentum Timer Pro. So what do we want? A one-day flip and a pair with the fast signal. This one right here on our CTA-Timer Pro report, going from short to less short. You see that? That's your signal. That's what our most successful traders, those who are using our reports, they've said they've gotten rid of everything else. They use those 2 signals. They said it works so many times. They said it's changed the way they trade and made it easy. Can make it easier for you too. Links in the description below. 14-day free trials. Sign up. Don't like it? We'll give you your money back. Upside target 175.26. That's your 21-day moving average. Outside target 166.57. Woof. Let's take a look at gold. It's going down some more potentially, but we said it was going to get down to this support level. How about this? We're on the 2-year chart. There's the 2-year volume profile. It's tagging support. This thing's got to hold up here, but notably, here's your left shoulder, head, right shoulder, neckline. Broke it, bear trap, Bulls came in, Metre said, gotcha, and down it goes. Likely more downside here to come, but maybe not a whole lot. Let's take a look at the broader picture on the weeklies. Again, haven't looked at this. We're near oversold territory on the weeklies. That's the case I'm making here. We can see more downside risk coming for GLD, but setting up a potential buying opportunity in the not too distant future. We've got our target 166 down here is where we're looking to see this thing hopefully settle. If it doesn't, well, you're looking down a whole lot more on gold. A lot of you said, hey, I'd be interested in buying there. Well, I think you're going to get a great opportunity. Now, let's take a look at GDX. Everyone said there was a double top. We showed you the double top, and then we showed you the double top turned into a head and shoulders top. How about this? GDX, momentum, negative. This gets the same setup as gold. We think huge opportunity here in the metals and the miners. RSI, 40, negative cross on the MACD, 9 consecutive daily sell signals on Momentum Timer Pro. Again, what do we want? A one-day flip and then a matching fast signal on the CTA-Timer Pro report showing the machines are short covering. Friday's close 2689. Downside target roof revised all the way down to 24. I know some of you say this can't happen, but it has. I told you it would. Upside target 2956. I'll make the case for that because there's a lot of pain. A lot of people love to be along the metals and miners. They move quickly, so be careful. Let's take a look. Where's our upside target? Well, that is 2956 here. You can see the volume profile on the 6-month chart. Let's go back to that 2-year chart. It's a little higher at 3156. We're looking at a breakdown potentially. We talked about here, downside target 2498. That'd be right down into this chunk here. So there is some further downside here. We know it's coming off oversold territory. That is positive. We're seeing the MACD start to roll up. If those trigger on those 2 reports, then that's where you'll take a position, look to get some upside movement out of this, and when that happens, we'll revise back with some rough stop losses. But here's what I want to tell you: left shoulder, head, right shoulder. Here's another left shoulder. Here's another right shoulder. This is something to rent, not to own. Keep it on. Rent, not to own. Keep your stop losses tight. How about the dollar? This thing's been on an impossible tear that just won't stop, and we're making the case now. Well, your big opportunity is going to be the opposite move in the dollar. Take a look at the reverse with UDN. We'll cover that when we get there. 53 consecutive daily buy signals on Momentum Timer Pro. When you're that long, doesn't matter if you've got a MACD that's negative. This means at some point this reverses. That's why you're looking as a trader. Why do you want to know momentum? Why do you want to know it over time? Look, it's maxed out on the 1-month window, the 3-month window, and the 6-month window. It doesn't go forever. This is looking like what's going to be one of your biggest trades at the end of the year is the dollar coming down. Friday's close, 2974. Upside target, well, 3004. Unchanged. I left it there. Downside target, 50-day moving average. Take a look at the dollar here and see what's going on with UUP. And look at that, a massive rally here. You've got the volume profile on the 2-year chart, 2839. This thing just looks like it's going to go on forever, but it's not. At some point, these big moves eventually reverse, and you'll see it. That'll be the opportunity. For now, we still have the upside target a little bit higher here. Of course, we'll see the CPI report will probably have a big impact on the dollar. So I'm going to say don't look for too much movement out of this going into, of course, the first 4 days of the week. Let's take a look at the weeklies here, and you'll notice we're overbought on the weeklies. Can stay up there for a little bit longer, but don't look for it to stay there forever. At some point, the dollar comes back to reality. Now let's take a look at platinum now. Part of our recovery trade series, we've got momentum's negative. RSI is at 41, MACD negative cross. Some of you are saying you'll never get out of this one. Watch and see, my friends. 9 consecutive daily sell signals. We've got 3 open positions. Cost basis 87.56. Friday close 81.13. So we're upside down. This happens again when people don't use the stop losses. This can happen, but you can recover. Upside target's 100-day moving average. That's what we're looking for. Downside target down to 78.22. Hit our downside target already. Looking for the combo of what? You got it. CTA-Timer Pro staying short covering. Momentum Timer Pro flipping for a daily buy signal. Let's take a look at platinum as we head toward the end of our show here. And what do we see on the 2-year chart? We notice the RSI is almost back down to oversold territory. This is exactly what we want to see before a bounce. We see the MACD's trying to flatten out here, maybe a little early, but we're looking for a rally here at some point. We know that when this thing gets beaten up and down, it does take off at some point and it starts to rally, and that could be on the key of the dollar reversing here, and that's something I could say would look very positive. That's why we're not done with this. That's why we'll look to add another position when the reports confirm it, because there is a way out. When you've got in your bad trade, it's not the end of the world. A lot of people make mistakes. That's why we're showing you how to recover and still make things work. And with that, I'm Steve Van Metre. Thanks for being fans. Thanks for watching. Bye now.